TSMC has an overwhelming share of manufacturing. They manufacture close to 90% of all the artificial intelligence chipsets. For 1 gigawatt of data centers that are created, an investment of up to $50 billion is required.
What are the major business segments that make up the AI ecosystem?
In my view, the risk is not participating in this AI revolution. The main opportunity of artificial intelligence actually lies in
The investor community loves hidden opportunities. Who are the tier 2 beneficiaries?
perhaps close to 20% of the artificial intelligence consumption will actually come from the Indian consumers.
Which ones are realistically expected to shape within the Indian economy?
We are dealing with a situation of undervaluation rather than overvaluation.
Welcome back to Torch Investment Lab. Today we are kicking off a brand new series titled AI Economy. In chapter 1, we're going to break down business segments and tier 2 beneficiaries of the AI economy. To break this down, we have with us Mr. Vivek Doval, who has millions of dollars invested in the AI economy and is also heading AI projects. So, welcome, Vivek.
Thank you, Anuj. Very delighted to be here.
Wonderful. So, Vivek, everybody talks about AI as one huge industry, but we know that it is multi layered. So, what are the major business segments that make up the AI ecosystem?
Yes, Anuj, but I think we need to have a full sense of what this ecosystem entails. So I will start with the basics of it and finally come down to, mention the various aspects of the various companies in the ecosystem. Well, at the core of the artificial intelligence revolution has been the chip designing companies like NVIDIA and AMD, who have made very powerful graphical processing units, GPUs. Um, they are the chip designers, the semiconductor chip designers that provide the compute power for this artificial intelligence revolution. So they are the chip designers. Once they have designed the chips, they actually send the chips to be manufactured at the global foundry or the global factory of the world called Taiwan Semiconductor Manufacturing Company, TSMC. TSMC has an overwhelming share of manufacturing of a share of artificial intelligence chipsets. They manufacture close to 90% of all the artificial intelligence chipsets of the entire world. They are based in Taiwan predominantly. Once the chips have been designed by NVIDIA, AMD, Broadcom is another company, and these chips get manufactured at the TSMC. These chips are then actually taken and installed in the vast data centers, which are basically racks upon racks of computers, which are stacked up together to provide the vast amount of computing power. These data centers are typically owned by the hyperscalers. The hyperscalers are the companies such as the Googles, the Amazons, the Metas, the Microsoft, uh, the largest of the largest tech companies of the US. Oracle of the United States is also one of the big players in this space. Now, this is as far as the hardware part of the artificial intelligence is concerned. Then on top of that, of the hardware layer, is the foundational layer of the artificial intelligence, which is known as the large language models. These large language models are built by companies such as OpenAI, Google, Anthropic, DeepMind, Google, Meta, several Chinese companies are also, like DeepSeek, are also active in it. But they provide the foundational layer of the software, um, and these are known as the large language models. Then after that comes a variety of um, software and application companies that build their softwares which use the LLMs as their base, which you can say as the applied artificial intelligence companies and applications. Uh, and supporting this entire ecosystem of the hardware and software leading up to the applications that interface with the consumers and the corporates, uh, is an ecosystem that supports it, an ecosystem of service providers that provide a host of services to all the companies in this particular ecosystem to enhance their product offerings, to boost their productivities, and you actually have a vast amount of physical infrastructure companies such as energy companies, uh, transmission companies, which actually provide the energy that is required to enable the data centers to run. I hope that is the basic structure of the AI ecosystem on the supply side. Then beyond that is on the demand side is the users of the artificial intelligence ecosystem, that is consumers, enterprises, and government. And you know, going forth, the proliferation of artificial intelligence would mean that all of these three basic categories will be using more and more of artificial intelligence.
Oh, that was a fantastic breakdown, Vivek. Vivek, the investor community loves hidden opportunities. So, who are the tier two beneficiaries in this AI mega trend? If you could put some light.
Yes, Anuj. As I mentioned, there that the AI ecosystem at the core of it is the hardware companies, the data centers, the hyperscalers, and and the chip design companies, and that is one part of it, and the software companies, which is the LLM companies and the application companies. We can probably think of them as the level one beneficiaries. The level two beneficiaries are the companies that actually provide services to these AI companies and to the companies that use the services of the AI companies. Here we are talking about the Indian IT services companies and global IT services companies, which would be level two beneficiaries of this AI revolution. Uh, on top of that, there is a vast ecosystem of energy producers, power producers, transmission companies, switchgear companies, cable companies should also benefit from this artificial intelligence revolution. So I suppose those would be the tier two beneficiaries.
Right, right. So I was reading how the Andhra government is giving projects for data centers, and the project includes the renewable energy contracts as well. So any data center who wants to put who wants to put up the infra in Andhra will have to engage, will have to put up renewable energy as well in that particular project. So yeah, I completely understand what you're saying. A lot of tier two beneficiaries will also be there. So that gives us a great global picture. But let's talk about India. Among all the AI business segments, which ones are realistically expected to shape within the Indian economy?
Thank you very much, Anuj. I think, with all this talk that is actually happening regarding artificial intelligence and the ecosystem that is being set up globally, um, I think investors have to be very careful to understand where they can actually, where they can actually get involved in this part, in this major, once in a generation revolution that is actually happening, because um, much of this ecosystem is being led currently by American corporates, um, which are listed in the United States of America and probably are more accessible to the American investor or the global investor who's got access to these American companies. But in my view and our submission, this is not where the main opportunity lies. The main opportunity of artificial intelligence actually lies in those companies that are going to be the biggest consumers of artificial intelligence resources. Now, this presents a massive opportunity for Indian investors and Indian companies. Let us start with a few examples. As this AI revolution unfolds and the AI adoption increases exponentially around the world, uh, Indian IT services companies are providing a vast amount of IT resources, managing the IT infrastructures, and providing a whole host of application development tools for international multinational corporations, the S&P 500 companies across sectors: pharmaceutical, healthcare, banking, industrials, insurance, consumers, etc. Indian companies know the IT layout, the IT architecture of these companies the most. It hence would be logical to infer that Indian companies would be at the forefront of deploying advanced AI solutions for the global MNCs in the world. Now, I would caveat it with one thing that, interestingly, in this mega trend that we find, which is one of its kind, we will probably see in the Indian IT services doing a lot with a lot less. So they would probably have to do a lot of AI projects, which will probably balloon, exponentially, much beyond their imaginations at this point of time. As we go through 2026 and beyond, but they might be able to do all of that with far fewer labor, given that they themselves would be using a lot of AI for deploying the various tools and services. So whilst these companies may see their top lines inflect and go to a much higher level, you may not see the margins. You may see the costs not going uh, up very substantially, and we may actually see their headcount actually remaining static or even come down. Interestingly, the headcount of the Indian IT services companies have actually remained fairly static, and for some others has come down in the last 2 years. And we would attribute that to artificial intelligence as well, uh, along with the global slowdown. Um, Now, as this thing unfolds, these IT services companies are going to see a margin accretion and very substantial increase in profits and profitability. So the Indian IT services company is a very big beneficiary of this, this IT, um, the AI adoption globally. But then, if we come back a little bit closer to home, we find that the beneficiaries of artificial intelligence are going to be manifold. A prime sector that we would expect to benefit by artificial intelligence in fairly early innings, in fairly early days, would be the banking sector. And the reason is that the banking sector and the larger financial sector holds a swath of data, vast amounts of data of customers. Now, with this vast amounts of data and with AI computing power, these banks and financial institutions will be able to offer more targeted, customized products for their clients, boost productivity on running on their processes and systems to manage these accounts and vast operations they do. The fact that these companies, these businesses have vast amounts of customer data will allow them to leverage that to offer massive opportunities as far as new revenue potential, and also reduce their own headcount, and boost productivity, um, and a superior customer experience in doing that. So we would believe that banks and financial institutions which have got very strong franchises like the major Indian banks, would be also prime beneficiaries of it. We would think that the telecom companies would be very strong beneficiaries as well. Pharmaceutical companies that again collect a lot of data regarding the clinical studies and development of new products would be also prime beneficiaries of it.
Right, right. So I get the point. One, we were talking about the direct AI ecosystem, and then there are the other 80% of the industry, I would say, which are going to benefit by deploying AI services. TCS has already achieved an annualized run rate of 1.5 billion USDs in the AI services sale in FY26. It has already achieved that. And HCL has reported a revenue of 100 million from Gen AI services. So interestingly, Accenture had started this trend of reporting AI revenue, sorry, revenue from AI services separately in their disclosures, and now other companies have started doing that too. So that's quite interesting. Although there is no way to verify that so much revenue has actually come in from the AI services.
You can definitely check the results of the companies to actually see what they have delivered in way of AI revenue. So it is definitely verifiable, and there are companies like Gartner and IDC, which are international research companies which collate industry level data for IT services and artificial intelligence, and they are showing similar trends as well. Well, and if you had to be even more holistic about it, the commentary that we have actually seen from the likes of Google, Microsoft, Amazon, each of them are talking of almost a billion AI customers already in the consumer section, in the consumer segments, etc. So the AI adoption and the AI traffic is very, very real.
I get the point. What you're saying is the monetization has already started for the consulting layer, the Accentures of the world, the IT services layer like TCS and HCL, as we just mentioned. And interestingly, there's a Chinese company called Bairong, who has built AI as a SaaS. So it is actually built AI as a SaaS, and what distinguishes that from the IT services like the TCS? So TCS and HCL are building solutions for the customer and selling that solution, but there are companies that are coming up that have made their outcome of the AI solution measurable and are able to actually charge that service as a SaaS model because it is so accountable. So that's also an interesting way to look at it. I thought there's a Chinese company by the name of Bairong, I think.
Anuj, you're so right that SaaS solutions are being made available to the market, quite uniformly and quite holistically all around. For example, if you actually go to a hyperscaler such as CoreWeave or to a Google hyperscaler or Amazon hyperscaler, you can specify whether you want an LLM SaaS service of OpenAI, Grok, Anthropic, etc. So even at the foundational element LLM layer, it is being provided as a SaaS service, right? So like you can actually go to any of the hyperscalers and choose any of the LLMs that you seek to use. And those LLMs are also softwares and are being provided as SaaS. When you go further downstream, you actually have a whole host of application development and software companies which are providing their solutions as SaaS services, right? And now increasingly, these software companies are also providing their AI services as SaaS services. So it is actually happening fairly holistically. Uh, you know, Given the fact that you see what we are doing right now, what is happening globally is just in continuation of what has happened over the last 15 years. That is, when on-prem licensing and having servers in the premises was replaced by the cloud, much of the software is also started getting provided as software as a solution services on the cloud. So that migration from on-prem to SaaS has been going so from on-prem to cloud has always been going on, and and also for all the software that runs on top of it. Now, what is interesting in this particular revolution is that the software suite has been further enhanced by AI-based solutions. But the infrastructure, how it sits, has already been established The architecture of it has already been established from before. Obviously, the rollout of the new infrastructure will take, but each of the service providers know exactly where they fit into this ecosystem, and AI solutions are being deployed as SaaS. So it is not merely a Chinese phenomenon. It's also happening in the US and it's happening globally.
Beautifully answered. Vivek just answered that question, that realistically, which are the business segments that we can expect that will go to scale in India. So we discussed a strong India will have a strong play in data centers, renewable energy, and IT services. IT services as a solution and IT services as SaaS. This is chapter one. In chapter two, we'll analyze AI stock opportunities in India, more specific, and also how Indian investors can buy AI stocks abroad. Also, platforms like the Gift City for Indian investors. So, since we have already deciphered the AI, the business segments within the AI ecosystem, can you please help us with your opinion on which AI segments deserve a premium valuation and which AI segments may be overvalued, in your
Thank you
opinion,
very
please?
much for asking me this question, Anuj. I will answer this question in three different parts. Um, I think first question I think would be of a lot of interest to all the investors is that what does this AI revolution or this AI mega trend actually mean for the Indian markets? Um, Second, based on the commentary that we are actually seeing from a variety of international sources, is there an AI bubble that is actually building up? And thirdly, is that if you look out, 5 years out, um, you know, how would that economy and the markets of that time actually look like? So, firstly, as far as what opportunity this presents for the Indian market, I want to be very specific. This it presents a tremendous opportunity for the Indian market. The Indian market has been fairly lackluster in the last 1 year or so on account of various macro concerns, global macro concerns, tariff concerns, and so on and so forth. But of the AI traffic that goes around the world, that is the total amount of artificial intelligence consumption that happens around the world, perhaps close to 20% of the artificial intelligence consumption will actually come from the Indian consumers. The reason for this is that the Chinese artificial intelligence ecosystem will be ring fenced from the US artificial intelligence ecosystem. So the companies supplying there and the consumers will be domestically oriented in China. But for the rest of the world, the Indian companies, or rather the Indian consumer companies and retail will consume about 20% of all the traffic. What this basically then means is that the people who are consuming 20% of this traffic are not doing this for nothing. They are getting vast amount of productivity and efficiency benefits in their in their lines of work and their personal circumstances. So what this basically means in tangible terms is that all the large Indian companies, particularly the ones in the Nifty 50 and the larger ecosystems, will enjoy disproportionate benefits of artificial intelligence over the next several years, over the next 2 to 3 years. And their profits and their profitability picture will be vastly superior than what is currently being projected by you know by the analyst in Mumbai.
I wanted to ask you that, will that productivity actually boil down to increasing of margins? Because the competition might, I mean, the competition will come in, and the benefit of this productivity would actually flow down to the end consumer. So my question to you is, I understand the industry, the finance, the pharma, and all these industries will adopt AI and increase productivity. But will they be able to retain that productivity to increase their margins, or it will flow down to the end consumer?
Anuj, the answer to this is that probably both the consumer and the companies would benefit, and companies would retain a substantial portion of the productivity benefits in their profits and profitability. Because if you look at the industry structure across India, in most of the sectors, you would actually find maybe 5 to 10 companies dominating every sub-industry, as it were. For example, with the two-wheeler segment, there would be probably 10 players, but maybe there are like 3 or 4 players who are more dominant than the others. We do not face a situation of hyper competition in most of the sectors in India, where the companies are so aggressively competing against each other that they would need to actually pass on the productivity benefits to gain market share. And even if they were, they would not necessarily gain any meaningful market share, because the market shares are probably determined by other factors such as your distribution reach, your after sales service, and so on and so forth. So the productivity benefits, as they get implemented by the companies, will be very meaningful in their profits and their profitability. And we would suspect that the companies would end up retaining most of it. However, they may decide to actually pass some of the benefits to the consumer, and that would be great. The consumer in his own or her right is anyway benefiting tremendously by the artificial intelligence revolution themselves. So this would be icing on the cake for the consumer. They may get some benefits coming from the corporates, but the corporates are at the pole position of actually garnering and then seizing on some of these productivity benefits, because they are the people who hold the customer data. He or who holds the customer data can actually see massive productivity benefits. And so long as they hold the customer data, and which is enhancing or improving over time, um, and without any risk of actually losing this customer data, they don't necessarily need to pass these benefits to anyone for that matter. Right. So Anuj, shall I carry on with the other question about the asset bubble? Yes. Right. So, Anuj, in a way, there has been a lot of talk internationally of an asset bubble in the AI ecosystem. There is tremendous amount of monies that are going in the implementation of the AI infrastructure. For 1 gigawatt of data centers that are created, an investment of up to $50 billion is required. So, for example, the US has committed to the tune of 15 to the tune of about 11 gigawatts. Yes, somewhere in the range of about um, 11 to 15 gigawatts. And so that will equate into, massive trillions of dollars of investments. Let us say if over the next couple of years that number reached about 20 gigawatts at about $50 billion per gigawatt, that equates to about $1 trillion. So we are looking at about close to about $1 trillion to maybe $2 trillion of investment going into artificial intelligence ecosystem over the next 4 to 5 years. And so there have been very valid concerns about whether there's a bubble being built up into artificial intelligence. Uh, the only thing that we would add on to this is that if you look at the results of the companies such as CoreWeave, which is a listed hyperscaler in the US, or the results of Google, Microsoft, Amazon, all of these companies are seeing their top line go up and also their margins increase in the last few quarters. So even as they're deploying this artificial intelligence ecosystem with vast amounts of spend, they have already started seeing monetization of their investments coming through. this is one very big result that we are seeing from this, that the monetization of AI is actually happening. Second of all, in way of the actual investments, given that these companies, the hyperscalers, generate over $100 billion, many of them, of annual free cash flow, right? The Googles, the Apples, the Microsoft, etc. There would not be a scarcity of cash flow to fund this investment. That is part number two. So if you actually have enough monies to actually spend into this ecosystem, and you are getting investment returns out of it fairly quickly, then on an aggregate basis, there is not a case of a bubble. uh, there will be areas within, of course, after all, when such big investments are happening, there will be certain areas in which there may be over investments or substantially over investments, and there may be cases in those particular, in some of those cases, that write-offs would have to be taken or companies will go bankrupt. But if we were to look at the whole ecosystem, it is fairly, fairly liquid. It is fairly solvent, and we do not see, on a holistic basis, any asset bubble to be happening at this point. I think the third question that came out of it is that how do we project the economy and the markets in a period of 5 years once all of this comes into place? And I think this is the very important part. What we definitely know that in 5 years' time, the productive ability, the productive capacity of the economy, if it was 100, that productive capacity would have gone substantially up, maybe 120, 130. So the economies on the supply side will be vastly bigger. And in order to balance it up, the demand side, because what is supplied will have to be consumed, will also be a lot bigger. So actually, at the end of it, as with every new technology that comes through, the opportunity set for the consumer becomes much, much bigger. And so, on a whole, over the next 5 to 10 years, the economy, all the economies will surprise on the upside, and the economies will be vastly bigger. The people who are invested into these ecosystems will also be vastly more richer, going forward. And but I think due care has to be taken, that you invest sensibly and not to actually chase stocks or ideas at exorbitant prices.
Right, right, Vivek. This is a very interesting point that we've reached. We've all lived through the dot-com bubble, right? In every tech boom, the technology succeeds. What you're talking, but many stocks, as in 80% of the stocks, fail. So so we would require your opinion here, because we know what you just said, the technology is going to succeed, but having said that, a large number of stocks are going to fail. So as an investor, what are the precautions that we need to take? Because we've all lived through the dot-com bubble, right? So we've learned something. So kindly, what are the precautions that we need to take as an investor?
It's a good idea to actually have a diversified portfolio. Um, um, at any given point of time, because taking too much of stock specific risk or having only one or two or five stocks in the portfolio could be quite risky if one of those positions doesn't really work well. So having a diversified portfolio is absolute necessity at all times, good times and bad times. The second part, the risk. I would like to underline, in my view, the risk is not participating in this AI revolution. See, we are always nuanced. We are always impacted, nuanced by what has actually happened more recently in history. And whilst the TMT bubble burst is not that recent in history, it happened about 24 years back, 2001. That was the last time something like this in the technology space actually happened. And we call this is the recency bias, that the recent occurrences, impact our mind and impact our cognitive senses disproportionately versus maybe some other great ideas that have actually flourished around the same time. Well, if you actually look back over the last 24 years, you have seen companies such as Meta, Google, Amazon increase, Apple increase their capitalization, Tesla increase their capitalizations by hundreds and billions of dollars uh, during during this period. So the human mind has the capacity of reflecting on what didn't go what didn't go well more than reflecting on what actually worked. What matters in this particular case is how what is happening, how substantial this is in actually changing the outcomes of human existence going forward. So, in that sense, this is far more transformational than the telecommunication technologies, than the communication technologies, the wireless technologies that came into proliferation over the last 20 years. This builds on top of on this builds on top of the communication technologies of that era and the internet, and is to do with fundamental intelligence upgrade for society and the and for the corporates. Uh, and so this is much bigger, and the risk is that as this is unfolding, we are mere participants to it and not participating in it. So I think the risk is not in participating. Is the risk is if one hasn't participated in it. So I would think that it would make sense to have some level of participation in it. Um, and as I said, with a well-diversified portfolio, having participation in high-quality companies in the Indian market, which store a lot of data, which have a lot of data, um, and would be likely adopters of artificial intelligence, um, would be a winning strategy. Uh, Not being exposed to the economy, not being exposed to the market, especially given the returns in some of the mid caps and the smaller caps have been weaker in 2025, would be a losing strategy. So I think, the risk is not participate is if we do not participate in this massive AI transformation that's happening.
So the whole idea of doing this AI economy series is to help people participate. So we will take it in chapter two. We will take it to a point of how the Indian investors can participate in stocks abroad, as in what platforms and what are the ways to do it. But Vivek, having said that, we want to participate, right? The whole point of this running this series is that you have elaborated on the business segments. There's a hardware segment, three layers, as you said, designing, chip manufacturing, and chip designing, chip manufacturing, and data centers, and then there's a software layer, IT services and SaaS, and so we want your inputs as in which AI business segments that you elaborated on deserve a premium valuation, because all anything connected to AI right now is valued at a premium. But as per you, which AI segments really deserve premium valuations and which may be overvalued?
Well, given the fact that I'm an international investor and I'm exposed to international markets, um, we have actually seen a sell-off in many of the artificial intelligence companies over the last 2.5 months in the US market and elsewhere. Um, and given the revenue ramp that we are seeing at these companies, which are sometimes happening in the vicinity of 30, 40, 50%, um, and um, and their bottom line is growing really, really fast. Uh, you know, I would suggest that we are dealing with a situation of undervaluation rather than overvaluation. And I would say, the hyperscalers, the Googles, the Microsofts of the world, to the chip manufacturers like Nvidia and AMD are still big value buys as things stand today. I do not see any major overvaluation at this point of time, because valuation or overvaluation is relative to the trajectory of the business. When the trajectories of the businesses are growing so fast, if you were to not look at, say, 2025 earnings, but like 27 earnings, all the PE multiples actually look fairly reasonable.
Wonderful. That takes off a lot of burden from the investors community. Okay. So the key takeaways from this chapter one of our AI series is the business segments of the AI ecosystem, which is spanning from chips design to manufacturing to cloud data centers, and then on top of that, IT services providers and consulting as well. We've also learned about the tier two beneficiaries, which is the renewable energy sources, the real estate, the power, the transformers, the power infrastructure cables. Then we've also looked at India AI opportunity is different from US and China. The hardware opportunity may lie in US and China, but the IT services opportunity is well within India, which we've always scaled historically as well. So the productivity gains. So Vivek touched upon the productivity gains of the entire industry, the pharma, the finance industry, that they are going to reap out of this AI revolution. So we've discussed that, and the dot com. We discussed the learnings out of the dot com bubble that in our lifetime we have experienced. So technology will succeed, but many stocks will fail. So go easy, go staggered.
And have a diversified portfolio. I think that is extremely and a very critical at any given point of time.
Yes, that's important. That's very important. Yes, and what Vivek pointed out interestingly is the risk. There's more risk of missing this revolution. So go staggered, but stay invested. So, with this foundation of how the AI economy actually works, the next logical step, the next logical question is how should the Indian investors participate in the global opportunity? That's exactly what we'll cover in chapter 2. So, Vivek, thanks a lot for sharing your insights. Guys, if you've enjoyed this episode, do subscribe to Torch Investment Lab. Stay tuned. Chapter 2 is coming soon.
Thank you, Anuj.
Yeah.